that have worked in different areas of security and whatever. So I said to myself, let me see if these people would like to become a resource. And I don't care, we're not gonna rent them out. We're gonna make them available to people that need help. And so this was a helping hand place. That's what Resource became, Resource Referral Center. And that meant that it was a center of referrals, and they were resources. So we took a look at many, many people. So we stayed with people in the beginning. And we started to understand that many, many people had many, many experiences to share with upheaval and the pandemics before and everything that they had gone through in their life, but specifically now. Charlie Marr can tell you about that. But my point is that we wanted to make available as many things that we could through our organization that would be helpful to people that are searching for answers. And so we didn't leave any stone unturned. That's where we're at with that. And that's why we're here tonight. Cash is king. You know, the reality is how do you find it? Well, you're going to learn how to find it. People are going to learn how to find it. And you know what? They're going to need to learn how to find it. This is a necessity tonight, a necessity. So I'm excited about it. You know, it's not just a glad hand and okay, it's good to see you, and we'll call you in a little while. People have got to look at you and understand that you can maybe help them get some cash in their hand and start to create more business for themselves again. I'm a dominant person with that. I'm a little bit crazy, but my point is that I want people to understand we're here to help, not to hurt them. We're here to help. We're not to take anything away from them. Whatever the goals are, they're clear and they're outstanding. So people right here today, when we talk about Vince, all the people that we have here today are representative of companies that have done this before. They've helped people get cash or find cash, not a loan, but find cash. And so this is a searching party and a great one. I'm just excited to be a part of it. Thank you very much.
Thanks, Mike. We are going to proceed now. Thanks for reminding me, Mike, that was the right time for you to say it. And thanks for all the hand claps and the thumbs up, because Mike's very impassioned about all this. All right, Seth, we're going to get started here. In the promotional video that you made, you talked about saving money for a lab and for an equipment rental company, and there were huge amounts of money. What that money can go to the bottom line and can be used to help build the business. Can you give some other examples, and can you tell us your process while you're telling us about other people who've taken advantage of your service? Go ahead.
It's been quite eye-opening, very similar to what Mike was saying. Really what we do is we give companies the clarity and lens to know that they're not overspending on their operational expenses. So taking people and product out of the equation, what are you paying to process that credit card? What are you paying to ship that product? What are you paying the payroll company to send Jerry her check? What are you paying the healthcare company to provide the health benefits? That's exactly what we're looking at, and we are finding tremendous amounts of savings for companies with their current vendors. We're not looking to change anything other than what you are paying for the exact same service. And those two examples that I spoke about is literally just the tip of the iceberg. I mean, things like merchant processing fees that I just identified over $20,000 in overspend on 1 month, or the $50,000 that we just found a furniture company, we just saved them last month on their FedEx bill. So it's not changing who you're doing business with. It's why are you going to pay a penny more than you need to for the exact same service? And a lot of things that you're going to hear this afternoon from Vince and Robert are looking back on savings. Vince looks at your backtrack of your last 5 or 6 years on your electric bill. I'm looking what you're going to be paying tomorrow and next month. So I'm going to show you where you can cut those costs today to take advantage of them tomorrow.
Thanks. I'm just, one of our speakers is having a hard time getting on, so I'm using my other computer to send him the link. Yeah, so that's wonderful, Seth. So I have a couple questions here. What data or info is needed in order for you to run this kind of audit?
So we keep it very, very easy. It's a copy of last month's utility bill. It's a copy of last month's merchant processing statement. It's a copy of last month's ADP bill. All we're looking at is exactly what you are paying and running an analysis to show you if there's an ability to pay less. So it really couldn't be easier than just getting a few bills, putting them into a PDF and emailing them to me.
Do you find that your clients need to change vendors at all?
If they want to, we have so many relationships with not only experts in these fields, but the actual companies themselves, that I'm happy to present my clients with options. I look at myself as an extension of their team, of their procurement team, of their finance team. But you're not paying me a salary. I earn my fees as a percentage of what I put back into my clients' pockets. So we are here to help you. If I don't save you money, you don't owe me money.
That's wonderful to know. Wonderful to know.
It's very easy.
And what are 2 or 3 categories that you see that are the quickest and the easiest savings?
So especially over the last COVID months, we see the merchant processing fees, small parcel shipping, the FedEx, UPS, and DHL, contract negotiations. Those are with what has become of today. A lot more companies are going from retail to e-tail. It's the CPG, it's the e-commerce. We've had a tremendous amount of success with companies just doing merchant processing and shipping, quite frankly.
Yeah, so those are the big areas, right? People spend a lot and people can recover a lot.
You're absolutely right.
Yeah.
The more the merrier.
Yep. Thank you so much, Seth.
Thank you.
We're going to now transition to Vince. Vince gets refunds, money back from money you've already spent on utility bills instead of savings on future expenses like Seth talked about. And he talked in his video about a nursing home, a concrete manufacturer, and a cosmetics company, all of whom got sizable refunds. And I understand from your website that 75%, really 75% of businesses are overcharged by their utilities. Can you please share with us another client who your organization has helped? And what's your process? I'm going to unmute you so that you can ask to unmute. So I'm going to ask you to unmute yourself.
He has to unmute himself.
Yeah. He's logged in with his phone, so he has to unmute himself on his phone. There
Can you hear me?
Yeah, and we can hear you.
Okay. Yes, the process here, we are National Auditing Services. We are a refund audit company. We are the only A+ rated company in our industry. We do provide utility audits. We go back, as Seth says, we go back 6 years to see if you were overbuilt on all functional utilities. That's gas, water, electric, goes on, including telecom. That's all over the country. On a side note, if you own property in any of the 5 boroughs in New York, we will do the same thing on your property tax. If we don't get you a refund, we don't charge you anything. There's never out-of-pocket money, because if we do find money, the proceeds come out. The art fee comes out of the proceeds. We are an exclusive auditing firm for the largest nursing home in the country, and we've worked with stone manufacturers and another company. An interesting story. I was talking with one of the largest concrete manufacturers in the country, and he said, Vince, I don't have a lot of time to do this, but I'm going to refer you to an affiliate, not an affiliate, but someone who has a smaller firm. And if you do good for him, come back and we'll revisit this. Long story short, we were able to get this small little stone manufacturer $17,000. It turns out this was a test run because they were buying out this company and they wanted to see before they bought them out if I could do something for them. I was able to do something for them, and in turn, I got all 37 of their locations, and I think we got close to $1 million for them. The process is easy. Much as Seth, we require 1 month's worth of billing for each category you want us to look at. For property tax, we don't need anything. That information is accessible to us already. And then we come back. It takes 2 to 4 weeks to find out whether we got something. The only time it takes more is all to your benefit. That means we are ordering documents, we found something, and we're going to act on it and get you a refund. So if it does take longer than 2 to 4 weeks, feel good about the fact that you're going to be getting some big money very soon. More often than not, it will be a check from the companies that owe you money. It's very easy. We make it easy to do business with us. Just send the PDF of your invoice, and 1 LOA is all it takes. No matter whether you have 1 location or 700, only 1 LOA is required. We just need the invoices for all your locations if you have multiple locations.
Great. And that LOA is what's LOA stand for?
Letter of authorization.
Yeah.
To go ahead and move on your behalf.
Okay, I have a couple questions for you. We have already had what if a company says we've already had an audit, or we already have had somebody do our audit, what happens then?
Great question. We've had two incidences of that. One was a upstate New York stone manufacturer, a wholesaler of marble. And he said, Vince, you're too late. Sorry, buddy. We got 19,000 from a competitor. I said, you know what? Let's do what we call a piggyback audit. We go in. They had just gotten their check like a week earlier. They thought they were done. We went, I said, let's do a piggyback audit. You know the routine. Get me some bills, sign it here, and we'll go in and get it. And since it was a stone company, I used a little joke. We'll leave no stone unturned. We'll look until we find something. We found an additional $39,000. Then we had a large nursing home on the West Coast. Same thing. Vince, we just got $75,000. We use these people every year. We trust them. And I just came in. I go, give me a shot. Well, this was even better. We found them an additional $350,000. Now we're the new go-to company for them. They left the company that they were with for 7 years after we were able to triple a refund on a piggyback basis.
Yeah, so, if I were a skeptical person, I would say, this can't be real. What's the catch here? What is the catch? So
there is no catch. There is no catch. We go in, we go back 6 years. We let people know, look, Most companies come in and look at 6 probable causes of refund. Okay? We call that skimming the surface. We don't skim the surface. We will take a long time to find everything rather than try to get in and out. We get you, if we don't find you a refund, we let you know. If we find you a refund, we let you know that we have it for you and the amount. We use a proprietary software to do our audit. But the first thing we do is we have CPAs and legal analysts on hand, which do an ancient type of audit where they do it by hand. Once they're satisfied with that, then we put it through our software. You just sit and wait for a check. That's your next move. There is no catch. It's as simple as it gets. This is the simplest thing that you can do for your business, and wow, you might find some hidden money in the process. What a concept.
That's wonderful. Thanks, Vince. We're going to transition now to Robert. And, here's the refund we'd all like to get, right? We all pay the IRS a whole bunch of money. Wouldn't it be nice if the IRS paid us instead? But of course, it's really money we paid them initially. So, Robert, tell us about your process and about another happy client that you did some work for.
Sure. Thanks, Jerry. If I can, I'd like to begin with a 30,000-foot overview of the program. The R&D tax credit, or the Research and Development Tax Credit, was established by...
Gotta turn his volume up.
Oh, pardon me?
Yeah, you want to turn your volume up a little bit?
Is that better?
Yeah, especially sitting
Okay.
closer, I think it makes a difference too.
Great. So just wanted to start with a 30,000-foot overview. The R&D tax credit was established by Congress way back in '81 when Ronald Reagan was president. And the idea behind it was to make money available to companies to help them be more successful, be able to hire new employees, and to keep jobs on American soil. So originally, it was designed only for manufacturers. However, as administration by administration, Congress by Congress, the law was expanded. And today, it includes a lot more categories than just manufacturers. And it also is a permanent of the tax code. So there's 3 main things. First, you have to have paid taxes. You're not getting any money back unless you paid some taxes in. The second is you have to have an employee because the program began as a jobs protection. And the last one is it is expanded beyond research and development. So now it's just a company has to be considered creative or unique in what it does. So in other words, if your company's process means that you have to give some thought or effort on how to solve a specific problem or meet a specific need for a client, you probably meet that qualification. So let me give you some examples of how broad it is with some people that help over the last year. We had a chiropractic office in Pennsylvania, and we were able to get that chiropractor back almost $48,000 in tax overpayments. A general contractor in New Jersey with 40 employees, he got back a little over $250,000, looking back over the last 3 years. Excuse me, a sign manufacturer with, I think he had about 11, 13 employees in New York Metro, $146,000 in looking back over the last 3 years. A home health care agency, this is a pretty big one in Florida with 110 employees, they got back $1.4 million. And then a pool cleaning and supply company in Maryland got back $115,000. So, I mean, there's a lot of money hidden there. It depends what your company does, how much you've paid in taxes. But that is what we do, is get back money, as it says right behind me, getting you back the money you deserve because you've paid it in and you've overpaid your taxes.
Jerry, can I add something?
You're on mute. You're on mute, Jerry.
Yeah, I know. Go ahead, Scott. Go ahead. And we have a couple more questions for Robert as well.
I just wanted to say that I sent them to a client, small dental practice, okay? I mean, no, really not one of these monster practices. We found him $75,000. I think it took him 2 weeks. Seth's also working with that client, found him thousands and thousands of dollars. And I have to tell you, to be able to put money back on your client's balance sheet, it's a beautiful experience.
Yeah, so you've already worked with Seth and Robert and recommended them to your clients. And I imagine what that's done is made you a superhero in their eyes because you brought them a lot of value and it's really cemented your relationship with them.
Right, but that's just the bottom line is that we have to, all of us be concierge to a certain level, but when you have a client through a pandemic that was shut down and then he can say to you, wow, I got a lot of breathing room now, and that pays a lot of bills and a lot of salaries. So I would highly recommend both these guys, and I am getting to know Vince even better. But we're both old Brooklyn type guys, so we're going to break bread first.
Thanks, Scott. So Robert, why haven't we heard about this before?
Well, a lot of people haven't heard about it. A few years ago, the Wall Street Journal reported that about only 40% of the Fortune 500 companies were using it, and 95% of companies with fewer than 50 employees knew about it or took advantage of it. And there's two main reasons. First, it's just not an area that most CPAs practice in. Firms that focus on the R&D tax credit are highly specialized. It's like the difference between a general practitioner and a brain surgeon. If you go to your general practitioner, he or she can do a lot for you, but they're not going to do brain surgery. Both are real important, but they specialize in different areas. And second, there are not that many firms nationwide that focus just on the R&D tax credit like our team does. So that's why a lot of folks haven't heard about it.
Well, aren't R&D tax credits a little too complicated and expensive to get?
Well, they could be complicated, and that's our job. For 16 years, we've got a staff of CPAs who have just been doing nothing but going to the R&D tax credit and getting money back for people. So we do a free and no obligation study to see if you qualify and roughly for about how much. Some companies charge for that review. And then if you qualify, our fee is a percentage of recovery. So no recovery, no cost to the client.
That's wonderful. That's wonderful. And of course, that's the way for all of us. And so I would love to transition to Howie Mann, but he had a hard time getting onto this call. So I don't think we're going to be able to hear from him today. But I will tell you exactly what he was going to say. He works for Quick Commercial Capital. He has a business where he has access to 57 small lenders, like regional banks and even people who lend who are outside the United States. And so when a person fills out this one-page application, it goes to him, but it also goes to these 57 other sources of loans. And then they say, okay, we can do that for X percent, or we can do that for X percent. And of course, the percent of interest depends on the person's particular credit history and their credit viability. And so you really can't pinpoint the interest until that's evaluated. But the percent of income or the percent of interest can vary between 6 and 17%, depending on the person's credit score. And a bank might say no for a variety of reasons, because it's a bank that only wants to deal with something in the US or doesn't think that particular operational thing you need the money for is a good risk, or any one of another, their board just doesn't want to handle loans today. So you want to make sure that you check in with Howie, and so that you can find out an alternate source of loans for when your bank says no. Now, he talked about that motel example on the video that he made that was up on LinkedIn, social media. there was a hotel, and he told me a little bit more history. The hotel had got an SBA-based loan for about $3 million to refurbish the hotel and do some build outs for it. But they still were $100,000 short of what they needed to put in some new carpets and new air conditioning and a couple of new pieces of furniture in some of the rooms. And they needed this extra $100,000 to kind of complete the project and make it all worthwhile. And the bank wasn't going to go there. SBA wasn't going to guarantee that much. But because their credit was pretty good, he was able to get them that $100,000 from a loan source that was a smaller regional bank who was hungry for that kind of loan. So definitely go talk to Howie Mann for the kinds of loans that he makes available. He did tell me some of the usual questions that people ask him. Let me see if I can shed some light on this. Is there a penalty for paying off loans early? You'll have to ask him directly, but I have a feeling it's not, because they're hungry for these loans. And then he asked a question about, people ask him a question about deposits, and of course that's probably going to vary. And how long a time can I pay it off? Of course, that depends too on what kind of loan you want to sign and what interest rate and what the bank is going to allow. So those are probably all dependent upon the lending institution. So I'm putting words in Howie's mouth, but at least he's represented here on the call. And he and I had a long talk to kind of prepare for this call. I'm going to open it up now. You can take yourself off mute and ask a question. And Seth and Vince and Robert can certainly answer the questions. Who would like to go first?
I actually have a question for Vince, if that's okay. Vince,
Sure. Yes, Seth.
is the audit look back for you guys 6 years in every state? I know that for moving forward in utility savings, we could only do it in the 14 or 13 deregulated energy states in this country. So I was curious if that's any issues for you guys on a look back.
No issues. We have gone in all 50 states. We were able to look back in all 50 states.
And it's a 6-year look back, no matter the state.
6-year look back. Yep. Definitely. And we used to go back infinity, but the way we were finding refunds, we would put these utility companies out of business because they do it so often, and you know how it is.
Yep.
And you and me, we're going to be working together on some of these projects that get going.
We most certainly will.
Yeah, that brings up another question that I have. Can anyone here on this call, or whoever might listen to the recording later, can they use multiple people, multiple panelists all at the same time? So Robert, Seth, Vince?
Yeah.
Did somebody
May I
sign up
answer
for your
that?
services and get...
Yeah, I definitely, that's a definite yes. I mean, I think the three of us can collaborate on anybody that I have. I mean, I have manufacturers, I have nursing homes, bakeries, printers. I do work with healthcare to some capacity, but I feel the three of us could almost open up a business together and quadruple our income with our approach.
Yeah, that's great for business owners. Buy one, get two other.
I thought this was our business together.
Yeah, well, that's kind of the point of the Resource Referral Center, is to bring in all kinds of business owners to get these savings and refunds, but also to find more collaboration between vendors so everybody benefits. We're looking at the triple win here.
And Jerry, there is another aspect of what Profit Trust has the ability to do. That's actually a lot more in Vince and Robert's realm, which is a product called unclaimed property. I don't know if many of you have heard about unclaimed property, but New York State, as an example, has a fund of over $16 billion. You're hearing me correctly. $1 billion in all of our money. So let's say we closed a bank account and they sent me a check and I moved. They have to, by law, send it to you 3 times. If not, it actually sheets back to the state. So we actually have the ability to go in and find, and all we need is the company entity name. You can actually do this personally, but we actually just found a law firm $2 million in unclaimed property. I have another deal that I cannot really speak about, but someone that you guys probably have all heard of, probably 100 companies in a portfolio, and they said, here's 10, go see what you could find. So that's another area that we could help, but it's very, very, very much similar to what Robert and Vince are doing in terms of what's out there now that you just don't have the time or didn't even realize that that money was there. So there's a lot of creative ways to potentially find money. It's your money. We're not finding anything other than what you overpaid and what you're not going to be paying in overspend moving forward.
Wonderful. Yeah, thanks for bringing that up. Anybody else have another question? You can either unmute and talk about it, or you can actually put in the chat if that's more convenient for you.
Let me step in for 1 minute. Thank you very much. I do have a question.
Sure, Mike.
This is, to me, this is just fantastic. This whole, the whole program tonight. I've learned more about it a lot in a few minutes. My question is that, is it possible for a company that owns, I don't know, 500 buildings in the city, they can have one of these audits done too, Vince?
Yes, yeah, we do a lot of multiple building owners.
They may not know, what's wrong anyhow.
Yeah, they don't. Most of them, 90% of them, just sign it on the dotted line and never inquire. And that's where we come in.
Thank you very much.
Oh.
Yeah.
If I,
So I have a question for Seth based on Mike's inquiry. Do you have any platform to audit building management companies and other suppliers?
So it depends on the building. Most of the utility products that we offer moving forward are only for commercial buildings, not necessarily for residential. But there is, that's definitely an area. New York State is a deregulated energy state, which gives us the opportunity to shop pricing from multiple carriers. I'm not a complete expert in this, but there's, I think, 13 or 14 or 15 deregulated energy states. So I can't do this in every state. And even you look at New York, Long Island, for whatever reason, is regulated, but New York State as a whole is not. So there are a number of ways to help, not only on a look back with someone like Vince, but also moving forward. You were paying 12 cents a kilowatt. Now you're going to be paying 8 or some variable.
So now we got 2 of the 3 horsemen. So with buildings, Robert, can you find any R&D, pullbacks?
for a building owner,
Yeah.
they're probably not doing anything particularly creative.
I would hope with 500 buildings, they would be.
But if they're doing any sort of construction or, sub-development for new tenants, there, because, you've got roofing, you've got HVAC, you've got electrical. So they're solving individual problems with each building. Something like that can be done. The other thing I wanted to mention, because you talked about money going to the bottom line. Of course, any money that you pull back from taxes being paid does indeed go to the bottom line. So if you've got a business owner that's about to retire, or looking to sell the business, and move on, if we could look back 3 years and get them money back, then that's going to go right to the bottom line, and it increases the value of the business and its profitability for sale. So even if somebody is leaving their business, they might as well wring out that last bit of cash, both from the tax overpayments as well as get a higher price for the sale of their business.
An interesting point to add on is, and Vince kind of touched on this earlier, we could act as the tip of the spear, so to speak, for companies looking to make acquisitions. So a private equity company or anyone that's looking to acquire another business, what money is there that I know I can get back a lot faster as a return on my investment? You know, that example that Vince gave before is a perfect example of it. You know, they were looking to acquire a company, all of a sudden that's 17,000, that's right back to them in the purchase price potentially. So there's a lot of creative ways that you could use services like ours to create a lot of value and almost act as the tip of the spear.
That's a great point. We have a question in the chat about childcare agencies. So do you think that there is any benefit that the three of you could bring to a childcare agency?
Yeah, for us, I mean, it depends what programs they offer, but if they're structuring programs that are, you know, somewhat educational or catering to the different needs of different children at different ages, that is a planning and a creative function where they're addressing individual needs. So definitely.
Okay, that's good. Vince, Seth, do you want to talk about a childcare agency?
I would say child care agencies would probably be something that I would do a savings on. It'll probably fall more into Seth, but we would look at it though. It's never, you know, because it doesn't cost any money, and we have found money for child care in the past.
Yeah, especially if they're in, they're paying utility bills, right?
Yeah,
Yep, definitely.
and for us, there's definitely a certain, you know, insurances, you know, the property and casualties, the workers' compensation. Those are other areas that we sometimes find a tremendous amount of overspend is on these insurance policies. So for a child care center, 100%, that's probably the first thing I would recommend we look at.
Mm-hmm. Good. And then we have a question too about startup businesses. Are there benefits at startup businesses, you know, not the acquisition point spear that Seth just talked about, but another startup business? What could the three of you do for startup businesses?
Well, that one I have to sit out because if it's a startup, they probably don't have a tax history.
Yeah, right.
Right. And for me, since there's no history, there's really no opportunity for a refund at that point. But I think Howard Mann could definitely help her in that respect,
Yeah.
or help them in that respect.
Yeah, we've actually,
I know.
we've come up with this question a lot, and we are actually pretty actively working on and about to roll out some opportunities for companies, specifically startups, to take advantage of shipping rates that we're passing through from bigger companies to smaller. So the more you ship, the bigger discounts that you get from FedEx and UPS.
Mm-hmm.
So we're building a platform that actually allows the little guys to take advantage of a lot of the bigger discounts that you and I would not normally be able to get. We could also
one program.
Correct, and we're also looking at some opportunities on the merchant processing side of things, also to leverage relationships, so that the little guys are also taking not as much advantage of, but are getting some of the advantages of the bigger people.
Good.
So that's really immeasurable because we have Luke Ben Every on the call, and he does the same thing for health benefits and that kind of thing.
Yeah, payroll
So
processing.
identifying similar kinds of group consolidation for better rates
Correct.
for shipping or merchant processing or other kinds of things. So Luke and Seth, you know, I'll put you together.
Oh, I speak to Luke fairly often.
Okay, good. Well, yeah, we're part of the same group. Right?
Luke is a good friend and,
Yeah.
and a great person to have on your team. Trust me.
Yep. Okay. So just so we know, are there any opportunities that are time limited? You know, Vince has talked about a 6-year window and Robert a 3-year window, but other than that, maybe going forward, is there anything that might be time limited about any of the opportunities that you offer?
Well, for us, it's a 3-year look back. So right now it would be 2017, 2018, and 2019 taxes.
Mhm.
Once you file your 2020 taxes, 2017 falls off. So, you know, there's a window of opportunity that to retrieve any savings from 2017, you need to do that before you file your 2020 company's taxes.
And then the R&D tax credit provisions doesn't have an expiration date as far as tax
Yeah.
law.
No, right now it's a permanent part of the tax law. And the way things are going, where we're really concerned about our supply chains and making sure things are made and originate in the US, they're only going to strengthen it.
Yeah. Okay, good.
I have a question for you guys. Are there certain industries that you find more savings opportunities for compared to others? And that's probably for both of, you know, Robert and Vince.
Robert, go first. I'll take it next.
You're muted, Robert.
Somebody in the chat window, what was the question again?
Are there certain industries that you see historically more opportunities, so that if I have an opportunity to, or a business owner that I'm speaking with that would say, look, this is probably a good opportunity to talk about the R&D tax credits?
Yeah, definitely any medical practices or, you know, anything in medicine, manufacturing, automotive, software, IT, telecommunications, you know, any place there that actually home healthcare agencies are great. Any place where there's a individual attention, you know, to a customer's needs. I mean, the joke I usually say is I can pretty much work with anybody except the restaurants or retail, because that's just product on the shelf, product off the shelf.
Yeah. For me, Seth, I would say the heavy hitters, and actually they get closer to 88-90% of who we find refunds for, and they're substantial. You know, 6 figures, 7 figures. All type of manufacturers, hospitals, all type of nursing facilities, whether they're assisted living, you know, independent living, retirement communities, as long as they fall into that category, definitely there. Hospitals, supermarket chains. On the lower retail end, any bakery and any type of print shop or printing facility. It's not limited to that, but I would say on the upper echelon, closer to 90% of success is in those industries. While I had the floor here, Seth, I had a question for you. You say that you know, once the way you collect the fee is once the person has realized the savings that you put forth. Can you define that, like as far as like what you mean by that?
Yeah, so what we have the ability to do is benchmark what you are paying prior to engaging Profit Trust. So let's say you were paying 3% to process that credit card. We have now negotiated you to 2.3%. So last month you would have paid X, you did pay Y. So everything we do is fully transparent on you were paying this, you did pay this, here's how much you saved, here's how much we are going to invoice you of the percentage of the delta. So it's
Okay.
similar to that. And I actually have one more question back to you. Companies, or, you know, do they have to be directly responsible for the utility bill? So someone who's in like a triple net or in a different type of how they're paying for the utilities, does that come into play for you guys?
No, you know, say the landlord is paying it, and it's all in the rental, and it's the utilities are included. We get them to get the information from whoever's responsible. And also let me add another industry that we're good with There's two colleges that if I mention them, you'll definitely know them. But universities and colleges also added to the category list. But no, who's ever responsible, whether we go to them directly or we get the business owner to get that information, we'll get that information.
Well, we should talk offline about universities because we're finding a ton of money for universities in a number of areas.
Yep.
So we could
Big time.
that.
And then the one I want to talk to you about, I'd like to have you talk to them as well. And you know who they are. Believe me, everyone on this call will know who they are.
So
The
Seth,
mystery.
what industries are really good for you?
You know what?
For me?
We certainly are industry agnostic. You know, like I said, we're finding savings for law firms to universities to, you know, I just closed literally a contract that just got back for a manufacturing company here in New Jersey that, you know, we're putting them to our utility pool. So we really do run the gamut. What we have found to be our sweet spot is that 10 million to $500 million in revenue. We have companies doing less, and we certainly have companies doing more. But what we have found is, and private companies as well, usually those types of companies have enough spend in the areas that it's worth our time to, and it's going to be meaningful savings to them. And they also don't really have the time and resources to do all of this.
Yeah.
And it's not a public company where you have to go through a lot of layers to get approval. It's dealing with the owner, the CEO, the CFO to get the sign off on exactly what we need. Because ultimately, you know, we're going to present the savings. We need them to sign off on the implementation of them.
Which brings me to another question. Thank you, Seth.
Well, we're going to wrap it up, Mike. We have it's 6 o'clock
one
now. I have a closing statement. So can you add it?
Question.
Um,
Have you seen a difference in the public as far as with the pandemic in pivoting and working with you people now versus before?
I mean, I'm happy to start there. I mean, we've been busier than ever. I don't know if it's because of the environment, so to speak, and the circumstances, but it's also been because of this, what we're doing today, speaking with people. And I mean, I'm fortunate enough to get 10, 15, 20 introductions a week because I'm a very easy introduction. And people are willing to listen to what I have to say. So for us, it's been, there's not enough hours in the day, quite frankly.
All right. Well, on that note, I want to say that this is the whole point of the Resource Referral Center is to give Seth, as well as Vince, as well as Robert and Howie, some more introductions from those of you who see that this might be something that will really serve your interest and help you take more to your bottom line. So you will get a survey afterwards so that you can can pinpoint who you'd like to talk to, and that will make those referrals happen. We thank you so much for being on the call. We thank Howie, who can't be here today, Seth, Robert, and Vince, who are here for, you know, all the really great information that they gave and the great ideas and sense of possibility that you can take more to your bottom line. We look forward to you being on our next presentation, which is October 28th, and it's entitled Work from Home Issues Business Leaders Need to Address. And the Eventbrite invitation will be posted shortly, and you'll get to see it. Of course, no cost. And you'll hear from an HR specialist and a few other people who are going to talk about, especially the technology that's going on to handle what needs to be handled. So be on the lookout for the survey. We really appreciate your feedback. So thank you. Give yourselves a hand.
Thank you, Jerry.
Thank you so much. And we look
Thank you,
forward
everyone.
to seeing you on the next call.
Yeah.
Good night, everybody.
Okay.
Take care.
Everyone, have a great evening.
Thank you, everyone.
Thank you.
Bye.
Good job, guys. Thank you.
Thank you.
Thank you.